So hi everyone, my name is Tian Yong and I'm an investment analyst with Phillip. We are sharing about what happened. I'm sure everybody is quite clear, but just to recap and remind ourselves of the truth that Trump is going to be the United States president. Okay, let that sink in for a minute, all right? So let's take a minute of silence. Okay, so all right. So just before I proceed, just some disclaimers. Okay, just have a quick read through. Today it's going to be very interesting. I see a few familiar faces from previous seminars. Welcome back again. It's great to have all of you here once again, and also a lot of new faces as well. Okay, so let that sink in. The big number is 290 as compared to 228. Okay, this is the kind of margin we're looking at when Trump won the presidential election race just earlier on. All right. So depending on which of the sources are, okay, but the margin is big regardless of which source you look at. Trump is now going to be the president of the United States. All right, and following which we look at some price reactions in various asset classes that we will be touching on today. Okay, at the top we have the US dollar index, okay, a proxy for US dollar in general. Second, we have your mini S&P 500 active futures contract, and also next we have the line in black, Brent crude. And then the line in gold or dark yellow, spot gold. Okay, so looking at the farmost part of the chart, we saw three of the lines dip, okay, immensely on the morning of the elections. Okay, while the other line increased. Okay, that sold line is gold. Okay, so there's an immense flight to safety during this period as it became more and more apparent that Trump might just be the next president of the United States. However, at around 2 p.m., we saw most of the movements reverse, more than reverse. So that is the puzzling part. Can anybody tell me why movements reverse after the results are more or less locked in? Anybody? Try to guess. What happened? Trump is the president. Why are stock prices increasing? Okay, so just to do a quick survey, did anybody watch the results live? Online, on TV? Just a show of hands. You're following the results live, okay? So in my previous seminar, I mentioned to the customers, get ready your popcorn and get your mouse ready at the platform, ready to trade the US elections, okay? So yeah, you were there following the elections as well. Okay, so one of the key reasons that I think caused the reversal in prices is Trump's acceptance speech. So for those who have watched the speech, we saw someone who is very un-Trumpish, okay? The way he spoke, he was criticizing his rival Hillary Clinton all along, but when he accepted the victory, he even thanked her and said that we all owe a major debt of gratitude to Hillary Clinton. To me, I was so puzzled when I was watching it. Okay, what is happening? Okay, it's like a U-turn. Okay, you go 100 km, then it goes down, go back to Jurong. Okay, so next one. He also called for political reconciliation. He asked both Democrats and Republicans to come together as one. So it's a unifying message that we have never heard before. From Trump especially. Okay, the second theme is global cooperation. So before that, he was slamming China, Mexico, trying to get out of the TPP, NAFTA, trying to get out of all the unfair trade deals that the US has gotten itself into. But when he was giving his speech, he said that he wants to seek common ground, not hostility, partnership, not conflict. I was so shocked. I couldn't eat my lunch that day. All right. How can words like these come out from a person like that? Okay, but it came out. Okay, so that's one of the reasons why markets, I feel that markets had a relief. They say maybe it's not so bad. Then it started to go, elections are over, let's move on. Okay, that's what I felt that markets were doing. So looking at the raw numbers, not only did Trump become the president, the Republicans took the Senate and the House. They have a majority. Okay, so it's a sea of red. Okay, in US Congress now. However, does this mean that everything is all clear? Does this mean that everything will be easy for Trump to pass? Not necessarily. Okay, while the Republicans took the Senate and the House, okay, if you look at the small numbers here, their majority has actually shrank. Okay, while they're still the majority, okay, the majority is now smaller. All right. And to look at how things go on in the United States, if you look at this, for bills to get passed into laws, they must go through both the House of Representatives and the Senate, and then the president has to approve it, or if he can just let it pass into law. So if things get stuck in between here, bills cannot get passed into law. All right. So to think that if everything and everyone is on the same side, the Republicans, that everything will get passed, it might not be true, because the representatives, the Republicans, they have natural inclinations. They tend to like certain things as opposed to the Democrats. Okay. So a few of these are very general points. We're talking about military, free trade, business, anti-regulation, anti-illegal immigrants, and pro-capitalism. Okay, so if you want to impose something like a 45% tariff on China, which one of the conditions do you think you'll violate? Okay, I'm looking at free trade. So if Trump wants to do something drastic, he may very well be stopped even before it can happen to begin with. So rest assured, the US system has gone through many years of revision, and it's a very robust system. The United States is not just one man alone. Okay, so that's just an overview on what happens. But I'm sure most of you already know what happens. Okay, and I'm sure most of you are here to find out what's next rather than what happened. Okay, don't tell me what happened. I also know already. Okay, so let's move on. Okay, so today I'm going to share my view on what I think will happen. Okay, let's just have some house rules. Try to note down your questions and keep it to the back of the entire seminar, not the segment, but the entire seminar, so that for purposes of recording, it can be smoother as well. Okay, so keep in mind your questions. You can note it down, write it down, type it in your phone, but try not to surf Facebook. Okay, so next, I'll be going into my specific segment. Today, I'll be covering US equity index futures as well as your foreign currency. And I'm here to share my insights. Feel free to oppose my view. Everyone can formulate their own views, but I'm just here to share what I think. So for today, I'll be doing a quick analysis, a personality analysis of candidate Trump as opposed to President-elect Trump. After which, I'll dive into US equity index futures, followed by currencies, the US dollar, and lastly, something which might interest everyone here, the impact on Singapore. Okay, how is all of this over there going to impact all of us over here? All right. So first, let's just do a quick analysis of candidate Trump as opposed to President-elect Trump. In this exercise, I've used two different websites to represent candidate Trump and President-elect Trump. Okay, the two websites are his campaign websites and his transition websites. Okay, so for candidate Trump, I'm looking at text and content from donaldjtrump.com. Okay, for President-elect Trump, I'm looking at greatagain.gov. So this new website has just came up maybe a few days. Okay, after his victory, this website was online, and it shared the details on what the Trump's transition team is looking to impose moving forward. So if we compare and contrast the details, the words, the kind of tone and words that are being used, we can get an idea on how this President-elect Trump might behave differently from candidate Trump. So the kind of key policies that I want to touch on comprises of four main sectors. Okay, first, trade reform. Second, healthcare. Third, financial services. And next, last, immigration and infrastructure. If you realize these four main sectors, main themes have major impacts, especially on US equity indices and currencies. So if you look at your S&P 500, you have your industrials, healthcare, financials, and also even your subsectors are your construction sectors. Okay. So for trade reform, I'm going to talk about the TPP. I'm going to talk about China. For healthcare, we're going to talk about Obamacare. Financial services, Dodd-Frank Act, and immigration infrastructure. We'll talk about this magnificent wall that Donald Trump wants to build. Okay. So first, with regards to trade reform, in candidate Trump's website, it was explicitly mentioned that he has intentions to withdraw the US from the TPP. Second, he wants to withdraw from NAFTA if he cannot renegotiate a better deal. Third, he wants to label China as a currency manipulator. And lastly, tariffs on China. The number was at 45%. I cannot imagine a 45% tariff on China by the US. Okay, I expect it to have disastrous results. Okay, however, after winning the election, it was all condensed to this simple paragraph. Not a single mention of any of the previous things. Okay. Like, oh, I won. Okay, yeah, let's just try to make things better, but no specifics. Okay, this is the first U-turn. However, out of this four, one of them might just happen. Okay, so Obama has announced that he will not try to push for the TPP to come into momentum before he ends his term as president. So the ball is now in Donald Trump's court. Okay, that's something to watch. Okay, that's for trade. For healthcare, we saw some consistency. The message is still consistent. He still wants to repeal Obamacare. However, in the news, we saw that he said he wants to keep some parts of it. Okay, so you see a moderation from totally repeal to keep some parts of it. For trade, you have your TPP, etc., but you're only left with the TPP. So we see a whittling down from campaign Trump to President Trump, mellowing down. Okay, previously, in the website, there was no mention of the Dodd-Frank Act, but that's not to say that Trump did not mention it during his campaign. In the new website, we saw that President-elect Trump still wants to repeal the Dodd-Frank Act. So does anybody have any idea what this act is? Just a basic idea. Nobody has heard of this Dodd-Frank Act? Okay, so following the 2008 crisis, you have your mortgage-backed securities. A lot of banks were doing securitization, then they ended up buying their own toxic assets. They don't even know it's their own, they just keep buying and selling, buying and selling. So after that, in 2010, the Dodd-Frank Act was introduced to regulate banking, okay, financial services. So they want to regulate your default swaps, etc. Try to regulate banking so that the basic idea is so that the same thing won't happen again. Okay, but that to some it might seem like over-regulation. So when you over-regulate American banks, it makes them uncompetitive as compared to banks domiciled in other countries where they do not face as much regulation. So Trump, being the very pro-business guy that he is, okay, he says that we want to repeal this, okay, because it's causing the banks to be uncompetitive. Another thing is your reserve ratios. Okay, so some banks, they are required to up their reserve ratios, and then you have a huge chunk of cash sitting there, can't really do much with it. They just are required by compliance to have it there. So that's another way which this act is viewed to eat into the bank's competitiveness as well. Okay, so next up, immigration and infrastructure. Okay, I want to bring your attention to this red line here. Mexico will pay for the wall. That's in the old website. In the new website, they just say they just want to build a wall. Okay, they didn't say I want Mexico to pay for the wall. Second thing, look at this word, impenetrable. Impenetrable physical wall. That's the aim. Okay, but just a few days back, parts of the wall can be just a fence. Okay, so we see a lot of moderation from a very hard stance. He's slowly mellowing down, okay, into President-elect Trump. So these are the things that maybe the markets are assessing and say, maybe it's not so bad. He has said so much in the past, he might not even do it. Okay, so maybe that's why you see the markets recovering as well. Okay, so let's dive straight into equity index futures. Okay, in my segment, I will touch on 4 different equity index futures in the American space. Okay, I'd like to introduce you to my 4 friends here. The first one is Mini Russell 2000, followed by your Mini Dow Jones, Mini S&P 500, and Mini Nasdaq 100. All these are futures contracts on US equity indices. Okay, as you can see here, your Mini Russell 2000, which is comprised mostly of small cap stocks. Okay, they are the best performers so far, followed by your Mini Dow Jones, and then your Mini S&P, and then the worst performing of the lot is your Nasdaq 100. Okay, this is no coincidence. There are reasons why this is happening. Keep in mind the 4 sectors that I've talked about earlier, and we will analyze the impacts on the different indices. Okay, so I've arranged them according to performance. 1, 2, 3, 4, from left to right. Okay, for the color scales, the darker the color, the heavier the weight on that sector in the index. So for example, if you look at your Nasdaq 100, it is really heavy on your infotech stocks. Okay, and for Russell 2000, it's heavier on your financials. I mean your banks, insurers, etc. Okay, so if you can draw a correlation here, the performance is actually, if you look at it, it's related to the sector weights as well. The indices which are heavier on your infotech stocks perform relatively worse than those without a heavier weight on the infotech stocks. Primarily because of these green points here. For your financials, you're looking at your repeal, deregulation, removal of your Dodd-Frank Act. Okay, this is expected to have a positive impact on your financials. While at the same time, energy, you have your energy independence and your industrials, which include your infrastructure and also your military, your defense stocks. So when you have the same sum of money and you see that, or maybe you have a lot of money in infotech, you see that financials might do better, you see that industrials might do better, would you keep your money in infotech? You pull them out okay, and you pour into the other sectors. This is what I call a sector rotation. So you rotate out of infotech, you rotate into financials, you rotate into your industrials. Okay, so this is my take on what happened as well. Okay, which is why you see your Russell and your Dow Jones doing better than your S&P and your Nasdaq. Okay, one more reason why your Russell 2000 is doing so much better now. Number one, Russell tends to have a bigger reaction to market moving news. And secondly, Russell, smaller firms, inward-looking policies are expected to have a bigger benefit on your smaller stocks. Okay, smaller cap stocks, smaller firms as well. Okay. However, my view of why things are doing so well so far is because the market has conveniently forgotten that Trump has previously mentioned he wants to impose a 45% tariff on China. Okay, so in the event that this thing really becomes more real, I expect the negative impacts associated with this one move to match or even be greater than all the good that's been done using the other policies. Because the scale of this thing is so huge. Okay, but if you ask me, I personally think that it's unlikely to happen, but as with my previous seminar, I would like to err on the side of caution. Okay, so in my previous seminar, I said that Donald Trump might just win. Okay, don't just take it for granted that Clinton will win. And even some people I've spoken to outside of work, they say, nah, Clinton won't do so, nah, yeah, all this, okay, that kind of stuff. But look at this, what happened now, okay? So going into the S&P 500, so among the four equity indices, I'm just going to use the S&P 500 as a moderate proxy for US equity indices. It tends to be one of the more evenly distributed indices amongst the four. For the S&P 500 as a proxy for US equities, we're looking at rather high prices. Okay, rather it is approaching an all-time high, S&P 500. But if you ask me, if there's still more room for appreciation for the index, I would say yes. But there are a few things we have to watch out for. Okay, zooming in the near term towards 2200, I'm looking at there's still around a 30+ point gap for it to appreciate before it tests its all-time resistance of 2200. Okay. Then any action beyond 2200, we have to see whether there's enough juice for the index to move above this target as well. Okay, so it is very possible to break above 2200 in Q1 2017 if Trump does not follow through with his 45% trade tariff and all his positive policies play out well. Okay, so for potential investors who are looking to capture some profits in the US equity space, okay, do not wait until it's approaching 2200, maybe 2199 to try to open an account and trade equity index, because by the time you sign, already break already. Okay, so why not tonight? Okay, if you are free, you can just linger around. We can talk about how you can capture profits, potential profits in the US equity index futures space. It's really exciting. One really good thing about equity index futures is that your S&P 500 on election day was not running, closed. But most of the actions took place in the futures contracts. Okay, so if for those who are looking to profit from the futures contracts on that day, the volume was high enough. We see most of the action. So what I'm trying to say is that maybe the index was closing. Let me just draw an image here. Hopefully all of you can see. If you all cannot see, you can approach me after the seminar. I'll draw in the hand and show you. Okay, so over here, okay, maybe the S&P 500 was moving like that, and then the market closed. Then the market opened at night again. Okay, but the US presidential elections was around here. Okay, it happened in between. But if you are trading the cash index, you can't really capture anything because market closed, nothing is moving. So what happened during this time frame? It went down. Okay, and then Donald Trump is announced the winner. His victory speech happened. Then everything rallied and reversed. Then the market opened again. But if you trade the equities alone, open like that, they close like that, open like that, no movement. You cannot capture. So that's one of the very good things about equity index futures. It runs for almost 24 hours a day. So if you're going to stand by for some major market moving news, you can go short here, go long here, you capture tidy profit instead of just trying to go short here and then it play you out and go long instead. Because by the time the ship has sailed. That's the thing about your futures contracts. Alright? So moving along, moving away from the S&P 500, let's talk about other things as well. Okay, just to recap the sector impacts. Okay, this is similar to the previous table I've shared, just that I've separated them into positives and negatives. Okay, while it may look like the negatives are few, positives are many, keep in mind that Donald Trump has changed his positions before. He might change them again. Okay, the good can become bad, bad can become good. Okay, and we also have left out the 45% tariffs potentially. And lastly, all of us as we move along in the years, people can say one thing, but what we really want to do is look at what he really does. Okay, so first 100 days we're looking at late January next year. So err on the side of caution, but I'm telling you there are still opportunities in indices. So for stocks, if you don't disturb them, they generally go up. Okay, if you don't do anything to them, they generally will appreciate over time because the company will keep running and try to make more profits. But if you try to regulate them, throw a spanner into their plans, suddenly impose something crazy or funny, then you see a lot of disturbance coming from uncertainty. Okay. So next, I'll move on to the US dollar and the impacts on the US dollar following the elections. Okay, a show of hands. Does anybody know what is the dollar index? Heard of the dollar index? Just a quick show of hands. Yeah, quite a few hands here. Okay, so the US dollar index is quite widely traded. It's quite widely watched because instead of looking at just one currency pair, your dollar yen, even your USD, SGD, some investors would like to look at the dollar in general. Okay, so what is the dollar index? Okay, in simple terms, it's basically a measure of the value of the US dollar weighted against a basket of currencies, and this is trade weighted. So, for example, if the US trades a lot of the euro, okay, you expect more weight from the euro, okay, in this dollar index. So at present, the currency weights are very heavy on the euro, followed by your yen, 14%, 58.14, then your pound, Canadian dollar, so on and so forth. So this is a more recent weight of the dollar index. And these weights can and will change over time. Okay? So how has the dollar index been doing? Since early this year, we saw that the dollar index has been ascending on the upward channel. Okay? And recently, during the building up to the elections, we saw the US dollar test the ascending resistance line. And more recently, we saw the DXY break. Okay, breakout from this resistance line. Okay, while it may seem like it's a breakout, we need to look at the larger scheme of things. Zooming out from 1980 until now, okay, if this dollar index breaks out from the level of 100, we're looking at the first breakout of the DXY above 100 since 2003. Okay, so this breakout is significant because 100, when it comes to people, we're always looking at round numbers. These are called psychological levels. If it goes above 100, okay, people who are familiar with charts can just tell me what is the next long-term level. We're looking at a huge paradigm shift if this breakout occurs on the longer term. So once again, opportunities are abound regardless of what situation you're in. And in this post-Donald Trump era, this is one of the opportunities that you can actually take a view on and trade. Okay, so by the time you wait until March next year, okay, you want to sign on the line, already break already. Okay, so once again, think about this. Okay, in 12 years. Okay, so next, another survey. Who thinks that the dollar still has room to appreciate? Share of views. Maybe just a raise of hands. Maybe in the next 3 months, who thinks that the US dollar still has room to go up? Okay, we have 1, 2, okay, plenty. Who thinks that the dollar bolat liao? Like gonna lose steam already? Ain't nobody. So everybody is very strong on dollar. Either that or hands too tired. Okay, so I'll share with you 3 reasons. 3 reasons why I think that the US dollar has room to go up. First, we are living in a world of divergent monetary policy. The Federal Reserve is always looking at instances and opportunities to tighten policy, while you have your central banks like the Bank of Japan keeping policy easy. Okay, so the US stands out in the global scene. Okay, it's one of the few who wants to tighten policy. With increased interest rates, actually we can expect inflows into the US dollar and the appreciative pressures on the dollar. Second, inflation in the US is expected to pick up. Okay, once Donald Trump takes office and implements his infrastructure policies. Okay, with fiscal spending, that translates into inflation. With higher inflation, Federal Reserve has more room to hike rates. Because one of the key concerns in 2016 for the Federal Reserve is that inflation is not high enough to hike rates. So with all this fiscal heavy infrastructure spending, you can expect that the Federal Reserve has more headroom to increase interest rates, which will translate also into appreciative pressures on the dollar. Third, okay, 2016 is winding down to a close. Major risk factors are rate hikes and also the presidential elections itself. So with these two key fear factors settling down, letting the dust settle, you can expect funds which have fled to safe haven currencies like the yen to come back to the US. Okay, primarily, firstly, because uncertainty is dying down. Okay, if Trump plays out to be quite a predictable character, and secondly, you have your higher yield on US denominated deposits. You can see the flight to safe haven currencies back into the USD. So these three qualitative factors are my grounds for validating continued strength in the US dollar. Okay, at least for the midterm. Okay, when all these things kick in. However, once again, I like to repeat this again. Anything happen, okay, Donald Trump can just throw a spanner inside and undo all the hard work I've done on this PowerPoint slide. Okay, so next. Okay, last part of my presentation, I'll talk about the impact on Singapore. Okay, and the domestic equity indices. So over here, we have a graph of two different equity indices, different but not quite different. The one in blue is your STI. The one in black is your SIMSKI. For those who trade futures on equity indices, you're more familiar with the SIMSKI. For those who do not, you're more familiar with the STI. So if you look at their price movement, it's almost 100% the same because their constituents are so much similar. Weights also are very similar. Therefore, they move quite in line with each other. So we can say that the SIMSKI can be a proxy for the STI and vice versa. So after establishing this, looking at the SIMSKI, okay, my mom trades contra stocks, and she's been telling me that all these bigger blue chip indices not really moving much. So from this chart here, you can see the whole index has been moving rather in a sideways trend. Now people ask me for support resistance, I keep giving the same number. Okay, like here for 3 months of support here, resistance here, or next week support here, resistance. It's very predictable. Okay, so I expect this range bound trading to continue. Okay, range bound price movement to continue. But recently you see the price band has been moving between, it's narrowed down to just these two price bands. I expect that the range bound trading to be continued and maybe with a bit of a bearish bias. Okay, so the level to watch is 306.1. Okay, there's a breakdown. I expect range bound trading to be still kept within another two price levels, 300 and 314. All right, that's for the SIMSKI. Okay, rather predictable unless something really big happens. Okay. So for the SGD, oh man, the SGD has been depreciating like crazy for the past few days. It's even broken out of its 1.396 level. It seems to be headed towards 1.42. I expect this to happen in the near term. Okay, and if we see more funds outflow and more protectionist measures by the US, that tends to hurt Singapore more than the US itself because of our position in the global landscape. We are so trade reliant. Once one of the big boys do something to close off their tap on us, we'll be hit more than they'll be hit. Okay, we need them, they don't really need us. Okay, so with that, we may even see the SGD depreciating to 1.44, but that's a far call because another factor to consider is MAS action. Okay, so if we depreciate too much against the dollar, we might see the MAS stepping in, trying to bring back the dollar to its zero appreciation band. Okay, but 1.42, in my opinion, seems like a more realistic near-term target to look at for depreciation of the SGD. Okay. So I'll just do a quick wrap up. So far, what we've covered, okay, we talked about what happened. We let the reality sink in before we look at some analysis. We talk about Trump's speech and how the Congress works. Next, we talk about the two different characters, candidate Trump versus President-elect Trump, and their positions on the four key sectors I've talked about. Next, I've shared a bit on the US index futures. Okay, we talked about the four indices, Russell 2000 doing the best, Nasdaq 100 doing the worst. Then we talked about the S&P sector impacts as well. Okay, and next we talk about the US dollar, mainly the index, and the outlook on why the USD is set to appreciate. Next, we talked about the impact on Singapore, SIMSKI and STI, and I gave some support and resistance levels, at least for the near term, and also how I think the Singapore dollar will play out against the USD, following a Trump-led victory. Okay? So at Phillip Futures, okay, most of the things I've talked about, you can actually trade through us. Yeah, I just want to share a few of the avenues that you can actually trade in a post-US election scenario. First, you have your equity index futures, the 4 indices that I've shared. We have mini contracts, tend to be liquid, okay, and almost 24 hours trading. You can go long and go short, okay, in a scenario with quite a lot of fear and uncertainty. At times, building up, you can also go short and go long. Go short, and if you're bullish, then you can go long. Next, currency futures and spot forex. You can trade the USD against many major currencies in the form of a futures contract or even spot. Okay, but both of these are leveraged. Okay, so you can actually magnify your profits. However, if you lose the losses, I also magnify. So I'm going to say that. Okay, all of this you can trade through Phillip Futures. Okay, but there's one more thing. You can also trade the USD as an index as well. Okay, so I hope you have enjoyed this segment of the presentation so far. Next up, I have my really solid colleague who is going to share with you on gold and silver. For those who are interested in these precious metals, you all can anticipate the really meaningful things that she's about to share. So guys, please put your hands together for my colleague Shiwei. Thank you so much.
Thanks Yong for his sharing indices and currencies. Today I will be talking about gold and silver. And this is my outline. Today, firstly, I will introduce what are the market drivers for gold and silver, and then I will introduce what happened during the election and how did gold and silver react to the election. And then finally, I will talk about what are the trading opportunities after the election, and I will tell you what I think gold and silver prices will be heading. And so let's begin with the first part, introduction of the market drivers. What drives the gold market? It's the first thing we may think of is supply and demand. It's very easy to understand when the demand is high, of course the price will go up. When the supply is high, it's very difficult for gold to rally. And then the next one, just imagine if you save all your money in the bank and instead of receiving interest from the bank, you actually pay interest to the bank. What would you like to do? Maybe you can consider investing in something like gold. So interest rate is another very significant factor that is driving the market. But today I'm going to talk about more. The first one is USD. So take a look at this chart. It's from 2006 until 2011. This line is gold, and this one is dollar index, just mentioned by my colleague Tino. And we can see the correlation, the negative correlation is very strong. So whenever gold price goes up, dollar index will go down. So what does it tell us? If we foresee that USD is going to strengthen, we can short gold. Because the gold I'm talking about today is local London gold. It's priced in USD and it's traded against USD. And the next driver is rates and uncertainties. All along, gold has been seen as a safe haven asset. It's widely used by retail institutions and even central banks to hedge their exposure to losses in the event of market downturn. And let's take a look at this example. This is a daily gold chart from June to November this year. And see what happened here. What pushed gold price up so dramatically? Very easy to guess. Yeah, correct. It's Brexit. It's the biggest black swan event this year. After the people in UK voted to leave the European Union, the people were so worried about the economy, the future of the UK, and also the global economy. And there were so many uncertainties that there might be more European countries leaving. That's why the price went up so much. So let's move to the next part. What happened during the election? Firstly, let's see how powerful is Trump to move the market. The same chart here, and we can see that before the election, the daily price movement is about $10 to $25. But on the election day, we see this long needle here. Guess how much did it move? Yeah, correct. It's $70. So what happened during the election day, as mentioned by my colleague Tian Yong, before the election, we all thought that Hillary is going to win. But on the voting day itself, people started to think, oh, the story may not be simple. And the result was such a surprise to many of us. Donald Trump has actually won and became the president of the United States of America. And then he gave his speech at 2 p.m. Singapore time. And how gold market reacts? Before the election, the market was very, very peaceful here. But during the election day, from about 8 a.m. until 12 p.m., gold price showed up to hit a six-week high of 1,337.4. The price increased by 5.39%. But after his speech, the price started to fall. And the price was until last Friday, it dropped by over 8%. So why has gold price started to fall? There are two reasons. The first one is change of attitude. Before the election, we all thought that Trump was just an emotional, crazy guy who talked nonsense and gave radical promises to build a wall in Mexico. And just after the election, he suddenly became a normal guy, a capable president who thanked his opponent Hillary Clinton for the very first time and also called for unity of the whole United States. And the second reason is reassessing Trump. People started to reassess Trump, reassess his policies. There are two main policies that he promised to adopt after the election. The first one is tax plan. This is captured from his official candidate Donald Trump website. He promised to reduce taxes across the board, especially for working and middle-income Americans, and ensure the rich will pay, but not so much. And also, he called for spending more on infrastructures. If all this can be done, it is expected that it will create a lot more jobs in the America, and also to benefit inflation and then to boost economy. As a result, the USD will strengthen. That's why the gold price went up so much, dropped so much, I'm sorry. But my question is, which one is the real Donald Trump? Will he really be able to deliver whatever he has promised? If you ask me, I will still be doubtful at this moment until I see something really happen. So the most fun part here is, what are the trading opportunities after the election? The most significant event we are looking at in December is the FOMC meeting. Just a few days ago, the vice chairman of the Federal Reserve mentioned that now is the good time to hike rate. But look at this chart. Just after the election, the probability of a rate hike in December dropped from over 70% to 40-something. But it rebounded to 81.1%. But is the central bank really comfortable and confident to raise high right now? Are they having the same question as me? It's still a question mark. So during this time, the market will be very volatile, which means it's a very good trading opportunities for all of us. And besides the FOMC meeting, there are a lot more other political and economic events we are looking at. The first one also happening in December is the Italy constitutional referendum. They are going to have this referendum to decide whether they are going to change the constitution. If it cannot pass, the president of Italy is going to resign, according to what he promised. If that happens, the opposition party may take over, which means the whole Italy economy is going to suffer. If that happens, I will not be surprised to see the gold price shoot up again. The next one is Brexit. After the people in UK decided to leave the European Union, Theresa May actually promised to take action before March 2017. But according to recent news, there may be a lot of uncertainties about this. In view of time, I'm not going to explain in detail what happened, but you can always search online. So when we are trading in this market, it's very important for us to follow all this kind of political and economic events, keep yourself updated, because the market is very news-driven. And since I have been talking about gold for a long time, let's give silver a chance. Okay, this is a chart from May till now. This one, the yellow line is gold and the white line is silver. We can see that silver has been following gold, but sometimes slower and not so significantly. So the green shadow here is the correlation. We can see that for most of the time, the correlation between the two products are very, very strong. Sometimes can be over 85%. So if you are trading in gold market, if you are too late to catch the movement of gold, you can trade silver. And also, if you are not sure about the future trend, you can long gold and short silver. And once you identify the direction, you can cut the wrong side and let the correct side to run. And so finally, my outlook for gold until end of Q1 2017. If you ask me whether I'm bullish or bearish on gold, I would say I think it's still too early to identify right now. I also recommend that long-term investors to wait for more signals before you enter enter any long-term positions. But because of the high volatility, it's very fun to trade intraday. So my view on gold price is that it's testing the 50% of Fibonacci retracement levels right now. It's a very strong support. I think it's going to consolidate here. But if it breaks, I'm looking at 1170 as the next support line. And the resistance level I give it to 1370, which is the previous high. And similar for silver, I give the support level at 16 and the resistance level at $21, which is slightly above the previous high. So my summary. Just now I talked about what are the market drivers, USD and risk and uncertainties, and then we review what happened during the election, and then I talk about the trading opportunities after the election. So before I hand it over to my colleague Jonathan, I'm going to share with you what you can trade with free futures. Currently, we have just launched this micro contract. The margin requirement is only below 100 Sing dollar. So with below 100 Sing dollar, you can trade one lot of gold or silver. And our FX 365 trading platform offers free demo account and which has zero commission. You can trade 24 hours in the global market. And also we have this trade go for gold promotion right now. If you are interested, you can approach our colleagues after the session. So now let's welcome our energy specialist, Jonathan, to share his views on energy with us.
Sorry, give me a moment to get set up. I like to talk hands-free. Okay, thank you, Shiwei. Okay, good evening, everybody. Okay, my name is Jonathan, and I'm the energy analyst here at Phillip Futures. Okay, and today I'll bring to you the post-election energy outlook, where my main focus will be on. Okay, so back to my point. Today I'll be mainly focusing on the WTI futures, and my trade duration will be, as what Sri has mentioned, just before Donald Trump gets inaugurated as the president of the USA. And that is on the 20th of January 2017. But before I start my presentation proper, may I ask you here, how many of you here follow the oil market? Hands up, please. Kichu. So I assume that no one here really follows the oil market. Anybody here is familiar with the oil market? How it moves and all? Okay. So now I'm sure you all are here to learn something new, and so this is my job to try to educate and share with you so that you learn something new today to take home. Okay, so this will be my presentation outline for my session. And so many of you here are all very new to crude oil. I'll give you a basic introduction to what are the drivers of crude oil. So this is more theoretical. After which, I'll go on to the more applied part where I'll talk about 3 points. Firstly is what is Trump's position on energy. Second, I'll talk about some US energy facts. And then I'll talk about some other factors that may actually drive crude oil prices. So this is the more theoretical part. This is more of the applied part. But together, I'm going to combine these 2 sections to formulate a 3-month WTI outlook trading strategy. So I'm going to give you a support level, take profit level, and possible entry positions so that you can work the order if you choose to believe in my investment thesis. Okay, so let's start with the basic theory of crude oil prices. So what are the 3 drivers of crude oil prices? Basically, to sum it up. Firstly, is supply. Secondly, is demand. And lastly, is the US dollar. So just to elaborate briefly, when US supply goes up, oil prices go down. In the current global market scenario, as you can see, crude oil prices fell from went up after to around $53 US. It has fallen to around 44.50 as of currently. The last time I checked it at 7:30. So this is because there's an oil supply glut. Later I'll show you some diagrams to confirm this so that you have the hard numbers. I will have at least the hard numbers to back me. The second important thing is demand. When there's increasing demand, there will be increasing oil prices. So what drives the demand for oil prices? Firstly, is the economic demand, economic growth. When there's economic growth, people spend more, and there's more output production. There's a greater demand for energy. Hence, energy prices as a whole will rise. Oil will be pulled up because of this. The second thing is also seasonality. Like in the US, because there's like summer and winter. So during the summer, the Americans like to go on like long vacations and holidays, so they drive a lot more during the summer. So as a result of this, right, the byproduct of gasoline will tend to go up, the demand will go up. Because the demand of a byproduct goes up, crude oil prices might go up during this time, depending on how much demand there is actually at the period of time. The second thing is also during like winter, right? Crude oil is also used to make heating oil. So heating oil is used to keep people warm during winter. I mean, for us Singaporeans, we don't really need to worry about winter because we don't experience winter here. But in the world, there are many countries that experience all this. So this seasonality does affect it. And lastly, the US dollar. Every time you look at the price of oil, what is it quoted in? It's quoted in US dollar. By the very mere fact that it's quoted in the US dollar, it will naturally have an inverse relationship with the US dollar, assuming that this supply and demand are held constant. Okay, so I assume now that I've established a basic understanding, right? Now let's move to the applied part. Theory lesson is over. Let's move to the more interesting applied part. Okay, now moving on to Trump's position on energy. Unlike Tian Yong's part, where you can see that Donald Trump tends to be a bit swinging around the fence on his positions, right? For energy, he seems pretty consistent. So this makes my job in analyzing a lot easier. And it also it's helped by the fact that the Republicans are very pro-energy. They are pro-fossil fuel as compared to the Democrats who are more clean energy driven. Because among the Democrats, there are people like Hillary Clinton, Al Gore, who are climate change advocates. While for the Republicans, they tend to be more skeptical of the climate change theory. Okay, so what is Donald Trump's goal? This is taken from his Great Again document as introduced to you by Ken just now. He seeks to achieve total energy independence for the USA, meaning that I want to rely less on imports. This is what I prefer from this very statement that he made on both his candidate website as well as his president-elect website. Second part, he has specifically stated that he wants to keep lower energy prices, right? To keep energy prices low so that it will act as a catalyst for US economic growth. As all of you have seen, the US economic growth is improving, it's recovering, but it's not as strong. So he wants to use this as an additional rocket booster to try to boost the US economy. So this is the goal. But how is he going to do it? He needs a plan. So currently the plan is to lift restrictions on shale and oil production. So these numbers projected here are what I've taken off his candidate website. So this might be a bit overstated, but keep the concept in your head. And so he said that if he deregulates shale and oil production in the US, he can create about $50 trillion of additional value in the economy. And another very important thing is job creation. Projected 5 million jobs to be created over 7 years. That is what he promised on his website. And another thing to confirm this view is that even after he wins the election, right, he's still consistent, is that you can see that he supports fossil fuel usage. Okay, so this is a newspaper headline that I put on a newspaper article on Monday, yesterday, where he says he is seeking the quickest way to quit the Paris Climate Agreement. Usually to leave this climate agreement, you need 4 years. He's looking for, right now from what I understand, is that he's looking for a legal way to leave before that. So as you can see, right, he seems to be very pro fossil fuel. Okay, so now that we have established Donald Trump's position on energy, let's talk about US energy facts. Let's look at some statistics to give you a more holistic picture so that you can form a very strong fundamental analysis before we make any investment decision. I think that this is a very important thing. Okay, currently each day the US consumes 20 million barrels of crude oil, out of which 40% or 8 million is imported from a foreign country. 8 million, that seems a lot. But ever since shale was introduced a couple of years back, it has reduced from a peak of 10.5 million to a number of now 8 million. So this is already a lot. However, if Donald Trump's plan were to really fall into play, and he really reduces energy dependence totally, means US is totally energy independent. It means that he wants to import 0 barrels of crude oil. Means he's like effectively banning the import of crude oil in favor of US domestic production. So let this idea sink into you first while we go through this presentation. Okay, so now that we talk about crude oil imports, let's talk about who are the top 10 crude oil exporters who may lose a very important business lifeline. So guess who, if Donald Trump really helps US gain energy independence, guess who will be the biggest losers in the game? Yes, as you can see in this diagram, the Canadians are the top importers to the US, top exporters to the US. Every single day, they export 3.2 million barrels of oil to the US, which is about 41% of all the oil imports. And how do they do this? They do this through the North American pipeline network. So their northern neighbors will be affected. Second, their closest ally in the Middle East, the Saudi Arabians, they export 1.2 million barrels of oil per day to the US. So basically, my feeling is that these two countries will be the most badly hit. But not to say that the rest will not be affected. So just to mention names, since they are after that, there's the Venezuela, Mexico, Colombia, Iraq, Ecuador, Brazil, Nigeria, and Kuwait. So these countries are all at risk of losing a very important oil revenue. Okay, now next we shall talk about energy subsidies. In 2013, the US government gave out 30 billion in total energy subsidies, be it clean energy, fossil fuels, and all. However, only 8% went to petroleum-related subsidies. So out of 30 billion, 8% is about 2.3 billion. That's very little. But my view is that once Donald Trump takes the presidency and supported by his Republican Party, they would increase the petroleum sector's subsidies so that the petroleum sector can increase their US production. So this is my view. So how are they going to do that? How does an increase in energy subsidies lead to more oil produced? It's true. This is my view, is that he's going to increase oil subsidies so that they can the US petroleum industry can do more research and development to find cheaper ways of how to extract oil from the ground, to find cheaper ways of how to prospect for oil, search for oil, and all. This should bring down the US current average of their estimated cost of production. As you can see from this diagram here, right? Currently, the US current cost of production is around 80 to 100 US dollars per barrel. And guess what? Where is OPEC? OPEC is around $20, $30 on average. So OPEC has a cost advantage. The Americans generally are the disadvantage when it comes to producing oil, because cost of production is very important. Generally, most countries only produce oil if the price of oil is greater than their cost of production. So currently a lot of American oil producers are sitting on the sidelines. So Donald Trump might be the guy might be the president who will bring them towards here and lower the average cost, which might work in their favor. So this is something very important to consider. Okay, and another very interesting, I like to study history in markets, is that there's always this thing called the pre-inauguration policy uncertainty. Based on historical observation, the last time, based on the last occurrence when a new president takes the White House, right? Oil prices fell between the day they were elected and the day they were inaugurated. So I would attribute this to policy uncertainty, the market not knowing what the president is going to do, the new president going to do. So let me give you a few examples in case you doubt me. Okay, so you see in 1992, when Bill Clinton won the elections, and before he took the White House, oil prices went down by 12%. George Bush in 2000. From the time he was elected to the time he was inaugurated, oil prices dropped 26%. Okay, to 2008, Barack Obama, oil prices fell 55%. This was during the midst of the shale oil revolution. Okay, so now that we have cleared that, now let's move on to other factors. Other factors, so these are my other bearish factors that I think can drive oil prices down lower. As my colleague Tian Yong has mentioned and has already explained to you, he believes that we as a house, our house view is that the US dollar will increase. And currently, if you actually follow oil markets, or maybe you heard the news, right, is that OPEC is in a state of disagreement. Yeah, having a lot of fighting among the members. If you all can remember, there was this time during September 28 at 2, I remember it was Singapore September 29 at 2 a.m. OPEC came up with a sudden announcement. The first time in 8 years, they say they are going to cut output. First time in 8 years, they can reach a verbal agreement. And because of that, I remember that they I think oil prices spiked from around $46 on, I remember it was on a Wednesday. By Thursday morning, it spiked around $49.50. And I remember when I first came in the morning, there were a lot of news journalists who were calling me to try to find out my views on what I think is going to happen. Yeah, but I mean, from what I told them on that day to even up to today, right, I always believe that this output cut might not actually happen. And so I'll show you in terms of this graph. So what you can see from this graph, right? This is the graph of total world supply in red color. So even after, okay, so this blue line shows September 28. Even after they had this great historical output cut, right? Total world supply shot up by 1.5 million barrels. OPEC, the very people who promised who were fighting for a cut, right? Even had their total output shoot up by around 500,000 more barrels. That day they were saying we must cut by 750,000 barrels. They say one thing, but when I look at the production numbers, it always shows another thing. So I think the main fundamental reason why they are unable to work together is because of the usual oil politics. Because Iran and Saudi are like the two major powers in the Middle East, and they are the two major powers within OPEC. And from what I've studied oil history, right, these two parties have been playing each other quite a lot of time already. So based on history and based on economic behavior, right, I don't think they are going to work together. So I think a very important date that we should watch out for oil is November 30th, when OPEC actually comes together, right, to try to, they are coming together in their headquarters in Vienna to try to see whether can they actually do a proper output deal. But even if they do agree to something on that day, right, like I say, do keep a lookout on the production numbers. If it continues to rise, I think the oil price floor might just keep on going lower and lower. Yeah. Okay, so after having considered all these different factors, here is my 3-month WTI outlook for you. So my contract of interest here is the WTI March 2017 contract. for those who are very familiar with futures, as you can see that the price action currently, right, is caught in this price channel for those who are familiar with technical analysis. So it's been stuck in this bearish channel for quite close to a month already. So here's a interesting trading idea that I would like to introduce to you, is that a possible stop loss position for this trade idea is to put it at 46.94. Current price level, the last I checked at 7:30 is at 46.50 for this contract. So my trading idea was that if you see the oil price, right, bounce against the upper bound of this channel, right, and it bounce and goes back down, so there's a strong resistance form around here, right, I think you can consider shorting oil. But like I said, when you want to do this, remember, keep your stop loss in case something happens, in case the inevitable happens, price move the other way, you have a stop loss to protect you. So for me, right, I decided to be a bit conservative in terms of my take profit level. Instead of using the 35.59 level, right, I would rather use the 40.61 level. So from 46.50, right, to around 40.61, right, the price level is it should drop about 12% unleveraged. But the thing about WTI contract, right, is that there's a maximum leverage of up to 11 times, you know. So this can be multiple. So it's 12 times 11. So if you guys here are very familiar with trading, right, there's this thing we always like to use called the reward to risk ratio. I calculated the reward to risk ratio for this trade setup, right, is 6 times. If for those who are very into trading, right, the common minimum reward to risk ratio, right, is set at 3. Anything more than 3 is a tradable idea. So to me, this is a very highly probable trade setup. Okay, so now in case you all weren't paying attention during my whole section, right, I decided to do you a favor and summarize everything on one slide. This is my view. My view is that WTI March 2017 contract, right, will fall to 40.61 before Trump's inauguration. So let me repeat again. Trump is going to be inaugurated on the 20th of January 2017. And so these are the 4 points I made. Firstly is Trump's position on energy. He's very pro fossil fuel, and he has stated that he wants to keep oil prices low so that he can stimulate economic growth in the US, and so he can make US great again. The second point is that there's this pre-inauguration policy uncertainty, as I've shown you the faces of the 3 last presidents to help you visualize and remember this. Also is that, as what my colleague Tian Yong has mentioned, rising US dollar. When US dollar rise, this should put some downward pressure on oil prices. And last but not least, my view is that OPEC is going to continue their disagreement and their internal squabbling, and they might not actually have an output cut deal. Everybody is fighting for their own self-interest rather than the collective interest of the group. Okay. So with this, I wrap up my oil outlook for today.